Good afternoon and welcome to your weekly FX Options report. Today is Wednesday, January 11, 2011. In midweek trade, global equity markets are all trading higher. This does come on the heels of a successful bond auction out from Portugal. Now, the government sold $1.25 billion worth of bonds, 650 million euros of bonds due in 2014, and 599 million euros of bonds due in 2020. There are still more debt offerings out from the Eurozone this week, including Spain and Italy. Now, despite the success of the Portuguese bond auction, other actions from Eurozone officials are still in focus. There is a possibility still for the bailout of Portugal and a possibility of a lower rate for aid, including the expansion of the European Financial Stability Fund. Now, later on today here in the U.S., the Fed's Beige Book will be released, and also on Thursday, the Bank of England and the European Central Bank will be announcing their interest rate decisions. And taking a step back, last week on Friday, the U.S. December jobs report was released. While the unemployment rate in the U.S. ticked lower to 9.4% from the 9.8% in the previous month, the non-farm payrolls figure came in slightly below expectations, with the U.S. economy adding just 103,000 jobs. Over in the foreign exchange market, the U.S. dollar is mixed in midweek trade, higher against the yen but lower against the euro and the pound. Now, the euro dollar has recovered the 1.3050 level after trading lower earlier this week. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And moving on to your daily technical report, let's take a look at the individual ICFX option pairs, starting out with the AUX, that is the U.S. currency against the Australian dollar. Now, for that pair, caution is advised. The daily RSI is challenging a resistance area, and therefore the preference of trading central analysts is short positions below 102, with targets coming in at 97.50 and 93.50 in extension. For the BPX, the U.S. currency against the British pound, a rebound is expected. Now, that pair is also challenging its resistance, and the RSI is mixed to bearish. Therefore, the preference of trading central analysts for the BPX is long positions above the pivot, which currently stands at 62.50, with targets coming in at 65.50 and 67.50 in extension. For the CDD, the U.S. currency against the Canadian dollar, that pair is also under pressure. It is pushing below a strong support area, and therefore the preference of trading central analysts for the CDD is short positions below the pivot of 102.50, with targets coming in at 97 and 95.50 in extension. Moving on to the EUI, the US dollar against the euro, the upside does prevail. It has also broken above its triangle upper boundary and should post a further up move. The preference of trading central analysts for the EUI is long positions above 74, with targets coming in at 79 and 81 in extension. And moving on to the SFC, the U.S. currency against the Swiss franc, that pair is under pressure. It is pulling back on its new resistance ahead of further weakness, and therefore the preference of trading central analysts is short positions below 98, with targets coming in at 92.30 and 90 in extension. Last but not least for this segment, let's take a quick look at the YUK, the U.S. dollar against the Japanese yen. Now, that pair is also under pressure and currently challenging its support. It also stands below its resistance, and therefore the preference of trading central analysts for the YUK is short positions below 84.70, with targets coming in at 80.40 and 79.30. Moving on to your weekly trend opinion, let's start out by looking at the US dollar last week. Now, the U.S. currency continued to gain against some of the majors, but there were some disparities against the exotic currencies. In terms of portfolio performance, since its inception in August of 2007, it is higher by 1,834.98%. We do have two trade alerts for you right now, including calls on the PCO and puts on the AUM. Starting out with the calls on the PCO, the pair is currently challenging a strong support level, and for the puts on the AUM, it has struck against its resistance or previous high, and it is breaking below its medium-term rising trend line. Also, the daily RSI is value directed. We do have three other pairs that trading central analysts are also keeping a close eye on this week, which include the EUI, the BPX, and the YUK. Looking ahead to next week, trading central analysts will be taking a look at the following pairs, including the CDD, the SKA, and the NZD. Starting out with the CDD, it is currently challenging a strong support level at 98.50, and a break below this level will call for further weakness. Moving on to the SKAA, it does stand below its resistance at 70.50, while its daily RSI is trending lower. Last but not least, for the NZD, it is posting a rebound on its support and still stands below its resistance at the 136.15 level. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great week.